Hello, my name is Albert de las Heras. I'm the Chief Business Officer here at Trusted Novus Bank. I'd like to introduce you to a new community banking series that will help you understand some of the banking services offered in Gibraltar and guide you on what you need when making important decisions about your finances. Our goal is to raise awareness of banking matters facing our community by bringing original content produced by us for you. We hope you find this helpful. Welcome to TNB's Community Banking Series.
Community Banking Series by Trusted Novus Bank. Welcome to the TNB Guide to Fixed Rate Mortgages. This video has been developed to help you understand fixed rate mortgages, a hot topic in Gibraltar. My aim is to help you make an informed decision about whether to apply for a fixed rate mortgage or not. A fixed rate product is a mortgage where the interest rate is fixed for a defined period of time. This can be 2, 3, 5 years, or in some cases longer. However, 3 years is the most common in Gibraltar. After the fixed rate period has passed, the bank will automatically move you on to another interest rate, unless you're given the opportunity to select a new one. Remember to check when the product expires and be sure to research other banks. So why are fixed rates an attractive option now? The Bank of England rate has been increasing over the past months, increasing monthly mortgage payments for many property holders. For example, if you currently have a mortgage on a variable rate, which is linked to the Bank of England rate, then your monthly mortgage payments will have increased. Now, with a fixed rate mortgage, you have certainty. You know what you're paying during the fixed interest period. So, for many people, this is an attractive option in a period of uncertainty. But there has been a lot of uncertainty with fixed rate mortgage in recent weeks. This is because the rate that banks offer to a large extent depend on the current market rate. In times of uncertainty, market rates can change rapidly, and so the rate that bank can offer on a mortgage product will also change. There's been so much uncertainty recently that banks have even withdrawn their fixed rates altogether. We witnessed this in Gibraltar several weeks ago. The good news is that fixed rate products are returning to Gibraltar as stability creeps back into the market, offering more options to you, the consumer. So maybe your current product is about to expire or you're shopping around for a better rate and you ask yourself, what do I need to consider? Well, hopefully the following will help you out. Let's look at some pros. The main advantage is that for the period of your mortgage, you know what your monthly cost will be, giving you certainty. This means that you can budget effectively each month with peace of mind. You'll also be protected if market rates were to sharply increase. With a fixed deal, your interest cost is locked in, regardless of what happens to the Bank of England rate. Now that you know the pros, you need to consider the cons. If you take out a fixed rate mortgage, your rate will be locked in for the period of the fixed rate. But if the market rates fall, you miss out on lower interest rate environments. There are some costs which come with fixed rate mortgages, and these can include setup costs, including bank fees, valuation fees, and lawyer fees. You might also incur penalty costs for any additional payments you want to make. You may face breakup costs if you want to repay the mortgage early, which can happen when unforeseen events arise in your life. There may also be fees at the end of the fixed rate period, especially if you move to another product. An important point to remember is that although the initial fixed rate might be attractive, the following rate you're offered once your fixed rate expires may be significantly higher than a variable rate. This means that you end up paying more, and maybe lots more, over the life of the mortgage. There is also no guarantee that you will be offered another deal at the end of the fixed rate period, something we saw during the last financial crisis, so you can end up with a more expensive long-term options. If you are considering taking up a fixed rate mortgage, carefully weigh up the pros and cons before making a commitment and consider the following when doing your research. Don't just look at the short-term fixed rate being offered, but consider the following rate as well. Compare offers from different banks using the information sheets they are obliged to provide you. These information sheets will show you the total amount you repay over the life of the mortgage. This is important. You may be surprised at just how much more expensive the mortgage turns out to be. Even if it seems to have an attractive initial rate, you may even end up paying more at the end of your fixed rate period than you pay today. Consider other alternatives to fixed rate mortgages. If you're looking to lower your monthly outgoings or want more flexibility, some lenders offer discounted rates for a period of time that don't lock you in for a long-term solution. You may also want to consider interest-only solutions and even changing the term of your mortgage to spread payments over a longer term, just ask your bank about these options. Make sure no matter what you do, look carefully at your budget. You may want to identify some areas where you would like to cut back on non essential spending, or even consider if restructuring or consolidating existing loans may also reduce some of your monthly outgoings. Your bank can help you to do this. Make sure you carefully weigh up what is important to you. On the one hand, you have short term certainty on your repayments. However, you may miss out if interest rate falls or get locked into a long term rate that is very expensive. Choosing a mortgage is a big decision. We recommend to speak with your bank to understand the full range of options available before making a decision. Consider the pros and cons of a fixed rate mortgage and then decide what is right for you. Shop around, compare offers, and read the small print. Good luck from TNB.